Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
And so here's an example. Here's the YUK. This is the U.S. dollar versus the Japanese yen. And we can see that over the last several months, we've established a very well-defined support level on the YUK, sitting in around that 80 level. Well, our outlook might be that that level is going to act as a key support over the next month. And so based on our observations, we want to sell put options below that support level, because every time that it's hit that support level, it's bounced. And you can see here it's happened time and time again. We've hit and we've bounced, and we've traded down towards it and we've bounced, and so on and so forth. This was that, of course, that tsunami and earthquake that really had a very significant influence. But you can see that once again that after the intervention of the Bank of Japan, you can see that there was a rally, a subsequent sell-off, but ultimately we bounced at that level, and we've done the same thing again today. And so the more tests of that support level, the higher the probability that it's going to hold. But remember, what I mentioned is that if we see that support level break, typically that means a very significant move is likely underway in that direction. So that's the important consideration. If we do use that support level as a benchmark for selling puts, we want to recognize that a break below that level means that we're going to have to pay attention to managing that position, because if we break and close there, high probability there's going to be a continued follow-through. Now, the one way that we could actually manage our risk is we could create what's known as a bull put spread, and we can do the same. We can apply the same observations on our price chart and look to sell off those put options at that 80 strike. But what we're going to do is we're going to go out. We're going to go down to a level of where we see further support, and we can actually buy some put options, and that actually limits our risk exposure. So if we weren't completely sure whether or not there was going to be a significant sell-off on the YUK if it dropped below 80, and we wanted to mitigate some of the risk exposure and, of course, some of the margin requirement, then what we can do is we can go out and we can take a look at some previous support levels, buy some put options down there, and mitigate some of the risk. And the idea would be that worst case scenario, if we broke below that level, we should bounce off of that level. And again, if there's a break-even point in here with our put spread, our bullish put spread. Remember, this is a credit spread. But what we've done is, worst case scenario, if there's a continuation to the downside, we cannot lose any more than the spread between where we sold and where we bought minus the premium that we've collected. Now we can look at it in the same context if we take the YUK as well, and we believe that perhaps the YUK might be bearish to neutral. Well, we can use some observations to sell off some call options here, and you can see that what I've done is I've identified just a key support level just across some levels where we've seen significant consolidation in the pair value, and my expectation here is that I don't think that with this rally that the YUK is going to break above this 82 level. So my expectations are that any options, anything above 82, are likely going to expire worthless. And so with that in mind, I write options above the resistance level, and as long as the YUK settles on that third Friday below 82, well, then I make my profits. Now, what I can do to offset that risk is I can create what's known as a bear call spread, and that bear call spread can be actually put together by identifying another resistance level at a higher price range or pair value range. And so as you can see here, what I've done is I've just gone back and I've basically identified this key resistance level right in here, and my outlook would be that, okay, well, even if you break above 82, there's a high probability that you are going to find resistance at 84 and likely come back and retest some of these lower levels, in which case my risk is going to be offset significantly. So these price charts, whether or not you're looking to create a bullish directional play or a bearish directional play, mitigate your risk utilizing a spread, or simply create strategies that are designed as income generation strategies. The idea is that we can really create a roadmap for our trade by looking at these price charts. And it gives us a way to kind of set some parameters so that on a day-to-day basis, when we wake up in the morning and we see a day like today, for example, where we've had some significant moves in the currencies, we can have some benchmarks in place that ultimately help us from panicking in our decisions. And again, if we see confirmations take place with moving average crossovers and support breaks and stuff, we can just simply say, nope, one of our rules has now been broken, and it's time for us to get out of the position. So just Mike just had a question with respect to the moving average settings, and I use 8 and 21, and so we're looking at 8 bars versus 21. My 8-bar moving averages my 8-bar moving average is in blue. My 21 is in red, and really what we're looking at is when blue crosses below red, we're in a downtrend. When blue crosses above red, we're in an uptrend. You can see with the YUK here, we're really in an indecisive trend right away, and that's actually very indicative of what's been happening in this particular pair value. But what we can do is we can just use those moving averages, particularly if you are somebody that's not haven't been exposed to technical analysis. We can use the moving averages as a very simple and easy to understand technical indicator for a particular directional bias. The moving averages that I've plotted in are actually exponential. And the difference, just for folks online, we're looking at 2 choices. A lot of times we could choose either simple moving averages or exponential moving averages. Simple moving averages place the same weight on all of the bars that are being calculated within the particular time series, whereas our exponential moving averages place more weight on the near-term values. And what that does is it gives us a little bit of early. It gives us a sort of an early signal that trends are going to change, because obviously we want to take action based on the near-term opportunities that we're seeing. What I wanted to do actually, and I don't know if I can swing this, because guys, we've got a few minutes left, and we're just going to summarize. But I want to just see if I can actually share a particular particular application that I have here. So just bear with me here, guys. I'm going to share my charts right now. Hopefully you guys are going to be able to see this here. I know that it's probably changed a little bit, and you guys can maybe indicate to me whether or not you can see this. And what I just wanted to illustrate, guys, because we've now, since I've actually put since the observations that we were making were in fact based on the characteristics of this morning's pair value action, is here's an actual snapshot of the CDD right now. And this actually, and I've got a couple of more advanced indicators online here, but this actually just illustrates to you guys what ultimately has taken place throughout the day. And this sort of lends credibility. And Katrina, I hope you don't mind that I actually I wanted to share what's happening today because I think it shows a little bit more relevance. Is you can see that today's pair value gapped down and actually was significantly lower than these moving averages. But you can see that the pair is actually poised to reverse back a little bit, and you can see right now how the moving average, this 21-bar moving average, is actually settling in as a support level. So rather than panicking out and saying, okay, the direction has changed, we want to see whether or not this actually holds. And you can see how very relevant it becomes for observing a particular change in direction. The other observation, guys, is I talked about support and resistance. So I can draw another line across here, and you can see here that previous support became resistance once again, became support, and now held as support today. And so this is sort of just for you to be able to see these simple indicators in action. This is what we would be looking at on a day-to-day basis. Now, as we become more proficient from a technical analysis perspective, there's some other indicators and certain things that we put into play. But what I want you guys to take a look at here right now is everything that I talked about this morning, based on this morning's observations, have actually held true throughout the day. And rather than panicking this morning and saying, "Oh no, the sky's falling," the U.S. dollar has changed direction here. Let's just step back and see what happens over the next day or so, and see whether or not this holds. If we get a very decisive close below this level, and we start to see consolidation in the pair value below that level, then we can step back and we can say, all right, perhaps we're looking at a change in trend. But right now, moving averages are crossing up. We've got a key support level that's holding right now, so that's how we can apply these observations. So hopefully that helps with for you guys understanding what we've been talking about here. Now, Mike just had another question with respect to moving averages and rather about looking at crossovers and that sort of thing. For me personally, for getting out of trades. For getting into trades and identifying a particular directional bias, I like to see consolidation above the 21-bar moving average, and so I may get in a little earlier before the actual crossover. But somebody that is actually looking at just wanting to be very simple with their observations, waiting for a crossover is not a bad idea. It just means that you might not get in as early, but you have a higher probability of being correct. And then what I'll do is I'll look for tests of key resistance levels for taking profits, and I would look for a close below this moving average for taking profits rather than waiting several days for the moving averages to cross over. So hopefully that gives you guys a little bit of insight in terms of what we're talking about here. So I'm just going to stop sharing that right now, and we'll wrap things up for this afternoon. But I'm certainly happy to take any questions at this point as well. The other quick sort of consideration I want you guys to make is fxoptions.com has some fantastic tools available for you to go in and take advantage of. News and commentary, trade alerts, podcasts. There's an open forum where traders can actually go in and discuss their views and that sort of thing. So it's a fantastic platform that I encourage everybody to take advantage of, and you can do so at any time. It's fxoptions.com, and ultimately as well, guys, just a little bit of information about our company, optionsource.net. We actually offer weekly workshops where we analyze the the currency markets, among other things, and really look at reinforcing some of these ideas that we've talked about here today. So if anybody's interested in learning more about us and some of our more up-to-date observations, then we invite you to visit optionsource.net and register for one of our online workshops. The other consideration, guys, as well, is that every week we publish the FX options outlook for the International Securities Exchange. So you could go in and you could see what we're thinking on a week-over-week basis by accessing the ISE FX Options Weekly Outlook that we publish it's usually updated every Monday for you guys to take to take a look at. And if you view what our expectations were, we were talking about the possibility that the U.S. dollar could take a little bit of a breather after the last several weeks worth of rallying against most of the majors. And so with that in mind, regardless of the news that came out over the past couple of days, the U.S. dollar was poised to take a little bit of a break, and that's what we're seeing take place presently. So on that note, just a quick answer from Mike. We cover options on equities, options on currencies, and options on commodities. We essentially cover it all. We're very much big believers in all of our members understanding how these markets all work with one another, and that way you become what we refer to as a multi-asset trader. So if you don't find any, and this is why I think these FX options, incidentally, are fantastic tools, because where there might be some indecisiveness on the equity side, there may be some interesting moves lining up in the currency side that you, as a retail investor, you might typically not be able to take advantage of in a typical equity options account. But you can trade these FX options very, very easily, and you can establish some pretty powerful strategies utilizing these particular option contracts. So again, open to any questions, but we are now cresting that 4 p.m. Time frame here, and so if there are no further questions, then I'll wrap things up for the day, and I'll thank everybody very much for joining in. Remember, visit fxoptions.com as well as optionsource.net, and ideally we can provide you with some interesting insights and observations. So thanks very much, everybody, and Katrina, thanks very much to you as well, and have yourselves a wonderful afternoon. Bye for now.
Great. Thanks, Jason. All right. Thanks again to all of you for joining us this afternoon. If you do want to learn more about the FX options that we've discussed today, please make sure to visit www.fxoptions.com. You'll be able to see a full list of the available currency pairs, plus all of the educational resources that Jason discussed today. So you can also sign up for free trade alerts with timely recommendations based on what's going on in the FX market today. So we hope to see you at upcoming webinars. Do make sure to check back at ise.com/webinars or fxoptions.com to see what we have on the upcoming schedule. Thanks again to everyone. We hope to see you again next week. Thanks. Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.